Hey traders, Dennis Wilburn, the AutoPilot Trader. Are your trades losing money because of operator error? There's two in particular that will cost you a bunch if you don't get it fixed. I'm going to show you how to fix that today in today's session of Trade Your Way to Wealth and Financial Freedom. Plus, we've got 3 stocks to take a look at. Market is back in confirmed uptrend. July, best month since April 2020. So that's over 2 years ago. Will it continue? I don't know, but we're going to be ready to trade it. Let's jump into today's session right now. Okay, let's get going. Hey, good afternoon, everybody. This is Dennis Wilburn, the AutoPilot Trader and Active Trend Trader. I want to welcome you to today's session of Trade Your Way to Wealth and Financial Freedom. As I said in the intro, I'm going to be later in this video, I'm going to basically address 2 of the major mistakes people make that wind up costing them a lot of money due to operator error. And I'm going to show you what to do, how to exit your trade when you're just about back to break even. Listen to what I'm saying there. Just about back to break even will tell you exactly what happened and what transpired. And we've all been there. And so if you do have any comments, please drop them in the chat box rather than the Q&A, because I'm not monitoring the Q&A. If you're joining us over on the YouTube channel, want to welcome you aboard. Please basically let me know you're over there and just say, hey, so-and-so is watching and if you have any questions over on the YouTube channel, go ahead and just drop those in the chat box over there also, and we'll get going. Anil, welcome aboard. Thank you so much.
Good to be here.
And I want to say thank you so much for having the flexibility not to do last week's webinar because I had to take my wife to the doctor, and Michelle's doing fine, guys. It was just a checkup that they needed to get done and that kind of stuff. And so, hey, Jeff, nice to see you over there. Aloha, as we like to say over here. And so let's go ahead and jump in and see what today's session has in store. Remember that all the materials we do present are for training purposes. Traders should paper trade any method prior to the risk of their own personal capital. Past performance, of course, is never an indication or promise of future performance. Neil, what do you think about the market now being in confirmed uptrend?
Yeah, I got a go signal actually last week.
Okay.
On everything on S&P 500, on NASDAQ, Russell, and Dow.
Okay, cool. And so are you focusing on any of the indexes, or are you focusing primarily on stocks?
Both stocks as well as ETFs.
Okay.
I'm even going to bite into TQQ.
Okay. And like I said, if you are watching over on the YouTube channel, please let me know who you are, because we're going to cover some really great stuff here. Here's where we're sitting as of about 9 o'clock this morning on the 29th. That should say the 29th. And so rather than the 22nd, the 29th. And so we're really pleased with how Active Trend Trading and the AutoPilot Trading service is doing. As you see, the markets look like they're trying to heal themselves. We'll see if that, in fact, continues to be the case. And we're going to jump in and take a look at the indexes first. And then we've got some great stocks to cover that Anil has provided one. And Steve, while he's not with us today, Steve did provide me a stock to take a look at. What's very interesting is this stock that Steve provided is one that I already had on my list also. So that's really good. Hey, Solomon, Ron. Hey, Rocco. Nice to see you guys. So let's go ahead and look at the indexes and see what the heck is going on with them. So we'll start with the S&P. The S&P, as reflected here by the spiders, continues to climb after ricocheting up. If you are a AutoPilot trader or a premium active trend trader, you know I talked about last weekend that what we may get after the Fed report is a pullback into the moving averages. And then if the Fed report was positive, watch for a breakout. And sure enough, here was Wednesday. The Fed rally worked really well, even though the inflation is still higher than they want it to be. The market reacted fairly positively to what the Fed did, raising the rates by a 0.75% on the interest rates. My upside target on the S&P, where I expect it to at least slow down a little bit and maybe give us our next pullback opportunity, is up here at, and here's what I've done, is I took the Fibonacci extension from this low here to this high, pull back to the low, and then projected that up, and that projects up to about $419. And so I'm looking at either there or up a little bit higher at the 427, and the other one would be right here at the 78% extension, and that is at approximately, let me get a number on that. There we go, 412.85. And so I love to use these Fibonacci's. As you see that this high here at the 419 may not get there before it does a retrace, simply because of, look what's going on over here. We've got a pocket of sellers that are over here, because the people who bought here were going to be basically saying, I'm finally back to break even. I can get the heck out of Dodge. And so what happens is, as we approach that level, these sellers come into play, and we'll talk about that again a little bit in a few minutes. So that's what we've got going with the S&P. NASDAQ is represented by the Qs. I highlighted last week this little purple box. I highlighted after we hit the high on the 21st. The purple box is the magic fib box, that's a retracement that pulls back into the about, a half to a third. It pulled almost back to the middle section and then has rallied up higher. We are approaching past resistance or past highs. So we may get some stalling effects. Right now, it doesn't look like it wants to stall, but we'll be paying our attention. The day isn't over yet. So I'm liking this up to the upside, be looking for potential pullbacks, doing the same thing. And I'll just show you how we do this with the Fibonacci extension. I go from the low here up to this high, come back to that low. And as you can see, the upside target on that is 322. Got another little fib in there at 316. And normally what I look at for a potential upside target is the 78% extension, the 100% extension, and then up here a little bit higher at the 127 2 extension, which is at the 330 level, $330.11. So that's what we got going on the Qs. Things are looking very positive. We've had a significant shift in momentum, both time frames, weekly and daily. Watch for the break of momentum here to pull back down. Again, we are now in a uptrend. The market is in confirmed uptrend. And so we'll look for it to continue on its way. IWM, the Russell also continuing to look really good. However, like the other indexes, it is approaching a level of past supply where sellers may be lurking here, sell when prices get up to this level. And so we'll see what happens. It doesn't mean that we're going to fail and go back into a huge downtrend. It just means that it may slow the velocity of the upward movement, is what I would call it. So, Anil, that's what I've got on the indexes. What's your favorite index?
Right now, QQQ is looking pretty good.
Okay. Excellent. What about you guys out there? Just type in the chat box. What's your favorite index? And if you're over on the YouTube channel, what is your favorite index that you definitely don't want to miss the next move on?
People are typing. One thing I learned from the last disasters we had, looking at TQQ, the weekly signal are pretty strong.
Yes.
Coming down, and now the daily signal is up. So I'm encouraged going into TQQ slowly but surely.
I agree with that. My son, Brandon, was doing some research, Anil, and doing some back testing. And one of the things that he found that week, the weekly charts, is after you've had a big sell-off, if you get a hammer, that hammer almost always leads to a huge upside. Hey kid, how you doing? So healthcare. Okay. So that's one of the things. And he said, Dad, watch for the hammer on the weekly. If you've had a huge sell-off, it almost always leads to a big trend reversal and then the continuing on. So I'm glad my son checked that out. I enjoy working with him.
Sounds good.
Yeah. And so, okay. So, okay, excellent. Hey, let's jump into the next section of what we want to take a look at, Anil, is the stock picks for this week. Shall we do Steve's first since he's not here?
Okay.
Okay. Let's take a look at Steve's pick. Steve's pick was NVDA. And Steve basically said that if it breaks above today's high on Monday, that's where he would be a buyer. NVDA has got some good things shaping up. It has earnings coming up towards the end of August. And so we could very well be heading into a earnings run. You can also at the potential of a similar run that you'd be looking at from the Fibonacci extensions, the fib on there. And it's amazing how these work. And if you wanted to know more stuff about Fibonacci's, go over to the YouTube channel, Market Tech Talk, subscribe over there. I've got 2 tutorials that talk about the fib extension up at 78, which would be right back in line with these others. And so somewhere between the 78 and the 78% in that upside. So what do you think about NVDA?
NVIDIA on my system had a triple screen signal last week, about a week ago. This week, MACD has turned around on the weekly. So
okay. So I like that to the upside. And again, it is, potentially breaking out right there on the high from last Friday. So then Anil has. Now, I'm not familiar with this stock, Anil, so tell me a little bit about it.
I believe it's in aerospace and defense sector, and it's the company is making carbon fiber reinforcements.
Okay.
I don't know the stock very well, but my tendency is I pick the strongest stock that meet my screens, and then I check the triple screen, and if it's there, I'm going after it. And then I research the company. So. Okay.
So are you buying right here? Or are you going to?
It's buyable right here, right now.
Again, and I know that, with your rules, you use a 5% stop loss.
Yeah.
And so I always like to project where that stop loss, if you bought it right here, a 5% stop loss approximately would be, down, clearly below the 8-day moving average. That works. And so again, and look down here, it's gotten some really good buying above the 50-day moving average on the volume. So it looks like it's moving up nicely. It's in a little bit of a box pattern, but if it breaks out from that, you're about $12+ to the upside. So, okay, now you ready for mine?
Yep, let's go for it.
Okay, mine is one I talked about yesterday in my market update, Riot.
Right.
It appears as if Bitcoin and some of the crypto is turning around. And I'll throw on just as a highlight on that is take a look at, here is the micro Bitcoin futures. As you can see that it looks as if we are pulled down. We're going into a new uptrend, break out of the 50. Well, what is Riot doing? Something very, very, very similar. There's a couple of different ways to trade this. One, you could trade it right where it's at, but if you do with a stop loss below the 8-day moving average, that is a little bit more than 5%. So you want to adjust your position size the right way. The other way you can trade it is just project where the 8 day is going to be on Monday, and it's going to be around $7.06. What are some of the positives I like about this entity is it has earnings coming up on the 9th of August. And so we may get a nice little earnings run. This puppy has some really good opportunities for that run right there, 74% in 10 days. That's the kind of move that these make. From this low up to this high, that this 942 is the Fibonacci extension. And from current prices up to that $9 level is about 29%. So if I can pick up 29% between now and the 9th, or whenever earnings are on the 9th of August, that would be awesome. If Riot is going into a more significant uptrend, that would even be better. So that's my trigger.
Just checked it on my triple screen, and you had a buy signal about a week ago on this one also.
Okay, so that would have been around here.
I can tell you exactly. It came on the 18th. We had a buy
on the
signal.
18th. Okay, so that's back down here. Cool. And the other thing about it is the moving averages are all in the proper, or heading in the proper direction. Jump over to the tech tip. And the tech tip for today, I got a text message this morning from a friend. Hey, Jamil, how you doing? A friend in California. The text message started with, where do you think Tesla's going over the next few weeks? Now, when I get those kind of questions all the time, and Neil, you probably do also. Is that right?
Yeah.
And so I always know typically, because I've been doing this long enough, many years, is that there's always more to the story. With that being the case, I want to know, okay, well, why does a person want to know that? Well, invariably, when you're getting a rally back up on something like Tesla. So as you can see, Tesla is moving higher very nicely. It has changed its character here. We had a change in the momentum to the upside on the weekly charts. We're basically gradually growing higher. We had earnings. It gapped up. Now we are above the 8, the 20, the 50, the 34, but we're running up towards the 200-day moving average, about 907. So as I responded back to my friend, I said, I kind of gave him a smart-ass remark, comment back. I kind of said, well, over the next few weeks, I think it's going to go up and down. And I go, why do you ask? So he goes on and explains, well, I got into it about 854. And so when I looked at the chart, I said, 854, okay, well, that tells me almost immediately he bought somewhere over here, maybe in May at 854. It was basically maybe on that day right there, or on April 28th. So that's when I said, okay, you got in here. And then what happens? We broke below the 200-day moving average, took the elevator right down. And now, like many of us, have had the opportunity to say, oh my gosh, I'm underwater with this trade, because this elevator down is not a good feeling. Now, part of the reason for taking the elevator down is because you go into every trade knowing two things: your profit target, 1, your stop loss, 2, and you put the orders in place. Because from this fall here, let's say you're in there at this level here, and that fall there, okay, that's not comfortable. That's almost a 30% drop. And that, can, depending on how much you had invested here, can be a really strong pucker factor of going, oh my gosh, it will never come back. But then about the time it hits down here, we start reciting the prayer, oh dear Lord, if you'll just let this get back to even, I will never trade like this again. How many have made that prayer?
I've done that.
You've done that? So how many of us have watched it trade come back, and we're getting really, really, really close? Now, this is just human nature. We're getting really, really, really close to break even. Well, if he got in at 854, he could exit right now and make some money on that. But then the rest of the story, so, well, yeah, I also bought a little bit at 900. Okay. And so I'm going, okay. And that's the second mistake that traders often make is, 1, they buy in the wrong position. And then once they bought in the wrong position, they add to their position. So misery likes company. buying in the wrong place twice is basically, a tough way to go, but it can cost you money. So there's the problem. What's the answer? We've gotten back all the way up where part of the trade would be profitable. So clearly he can do one, exit right now and just say, hey, I'm done with this trade, realign and calibrate, and then trade better next time. One, I'll start following some rules. I will listen to my friend Dennis and get his rules and apply to how I'm going to trade. That's number one. Number two, if this continues to move higher, which it very might do, it's probably going to run into resistance right here at the 200-day moving average, about the 910 level to 909, 908 level. So you could say, hey, well, okay, that'll be my profit target. If I can get to there and get out, I'm going to be happy. Well, that's half of the answer. The other part of the question, though, is what are you going to do to protect yourself from going back down? And you can put in what is called a conditional order, where I conditional order to, and it's called a one cancels other order if prices drop below today's low, and I'd give it 50 cents. I'm not going to mess around with that because basically, I've already on paper had this loss. Now, while I didn't take this loss, I don't want it to go back down there. That would be foolhardy. And so that would basically be wasting capital, because what is our idea? We want to preserve our capital. So I put in an OCO order, one cancels other, good till canceled, that if it drops below, I close my position. On the other side of that, good till canceled, the other order I put at 909 or 908, close it out when I hit that level. Number three that you could do is this could, in fact, climb all the way back up to $1,100. Well, what happens if I want to take that ride? Well, what you could do is basically just make that your target. Let's say 1072, but then keep just moving your stop loss portion up, the stop in it. Let's say Monday we get up and the low is 866. On Monday, I would, after the close on Monday, I would move up my trailing stop to that level. And then you just ratchet it up. And that way, this could turn out to be an okay trade, because the other frustrating thing is the good Lord answered my prayer and I'm back to break even and I'm going, okay, I get out right now. And then you get out and pow, it takes off on you and runs up another 10, 15, 20%. And then you kick yourself in the butt again. Oh, if I would have just stayed in the trade, look how much I would have made. And so what that does is it initiates a cycle, a losing cycle, not good for your psychology also. So then you have some explaining to your wife to do about, well, honey, that vacation we were going to take? Anyway, any questions on that?
Dennis, would you adjust your trailing stop manually every day, or you put a trailing stop that's permanent?
I would adjust it manually every day, just simply bring it up to 50 cents below the low of the day. For that, Anil, that's a great question. The reason for that is because of one simple reason, is that I want to protect capital. I want to protect capital. And eventually, if it continues to rise higher, you will get to a place where it will be totally break even and you continue to edge up. Because let's do a real quick projection out here. Now, I know we're going a little bit long in explaining this, but if I go to this low here and I extend up to this high here on the Fibonacci extension and back to that low, okay, that gives me an upside target. 100% extension would be 936. And so the other profit target, 127, is about 980. And as you can look to your left, that is in the ballpark where at each one of these pukas you see here, here, at each one of those, where you see that swing high, there is a pocket of people who bought and are basically wanting to get out of those trades that they bought here. Because, there's guys up here that made the same trade and then rode the elevator all the way down. They're saying the prayer, only though they're saying the prayer a whole bunch more times. So anyway, I hope that helps, and I hope that basically gives you an idea. If you don't know how to put in an OCO order, I've got some tutorial videos over there on the YouTube channel. You can call your broker and they will walk you through exactly what to do. Yeah, I may do a demonstration video this weekend just to reinforce that. So any questions? Yeah, Justin, those are the targets I'm going to, since you're an AutoPilot trader, you'll get some more refined information on that later on. Neil, what do you think, buddy?
No, I think next week should be interesting.
Okay. Hey, one of the reasons I trade the leverage ETFs is because I can count on them year after year after year to put on a compounding effort that will make me at least 100% per year. TQQQ from 2001 in 2021, 2022. But you can see really nice moves. And even if you only cut off half of those, they compound out at about 113% over those 12 months. And we do that with the AutoPilot trading. So if you're uncertain about what stock or ETF to use, you need to check out AutoPilot Trading. You can find it there, and also QR code. Just take a picture of that and it'll take you to the website where it talks specifically about the AutoPilot Trading service. Really pleased with that. I always remember this quote by Jesse Livermore. It's very simple. It's just basically, after spending years in the market and after making and losing millions of dollars, I want to tell you this: it never was my thinking that made the big money for me. As a matter of fact, it's always been my sitting, got that? My sitting tight. So buy right. So Anil, thank you, my friend. Again, I went a little bit over, but I wanted to get that piece out because I'm sure there's a lot of our traders that are facing similar situation because of the bear market that we may be coming out of.
All right. Thank you.
Okay. So aloha, everybody. Trade well, prosper. Mahalo. Have a great weekend. We are going to work really hard to generate some huge profits going into the last 5 months of 2022. So until then, remember, subscribe and hit the bell so you'll be notified of anything new coming from the market and or from the YouTube channel. And there's a trader tip video that'll be coming up right there. So aloha. God bless everybody. Have a fantastic rest of your week.